morning to all traders and welcome to another Markets and Waves video. Stavros was here August 17. It is Tuesday and we're going to have another interesting session again. We're going to leave a bit of the boring stuff that we'll be talking about lately. Because we keep talking about them on a constant basis. And we're going to have a quick look today on pound dollar, the Aussie dollar, US oil, then the S&P as well as natural gas. Okay, so starting first with the euro, with the pound dollar, guys, we can see that we were talking about a potential move to the upside the other day with a leg down here, close at the 50% being done, and we're also looking at the channels here that was pretty much rejecting prices, right? But what happened since is that we've seen, and we are seeing now, a very good signal on both MACD and the RSI that keeps prices pressured to the downside. So me thinks that it's very likely that we're going to see prices keep going lower down. Perhaps we're going to get to the 61.8 Fibonacci extension retracement, since also it is usually the correction seen in wave 2. Now, obviously, this signal could have already played its role here, and we could have gotten the impact in, and that might be my wave up, and that's just simple correction that is going to get us to a deep decline over here, and then we'll continue higher up. I will be looking, because the probabilities of both scenarios are pretty much on the balance. Maybe I would say 40% up, 60% down, 55, 45. But in case the 45 scenario will go up plays out, that means that we need to wait for a breakout of the channel, not just this move of the channel. And don't forget that this can also lead us to an ABC. So X wave could be up here, and then we can see another ABC down in wave 2, right? So we have to be cautious. The move here could really be validated once we break above this previous high of wave 1. And don't forget that a validation also back for a retest sometimes in the lower time scale is very helpful. So W, X, and Y for me here, A, B, and a C, and the diagonal here in C, a simple ABC, and then we're looking at perhaps to move lower down. This is perhaps maybe A, and that might be A 1, 2, 3, 4, and 5. It's very possible that if we are going to move lower down, we might stay within the channel rather than attempt to break it. So maybe get the A over here, the B over here, and the C down here at closer to the end of August. Who knows? We're going to see how pans out. We're going to monitor it, and in case there needs to be an update, then I will of course add it on the daily analysis. Now, Aussie that we looked maybe last week, we talked about the last leg that we've been expecting to the downside. That now looks like it's coming in. We've had 1, 2, 3, 4, and 5, 1, 2, 3, right? And we've got like 1 and 2. Looks like that's going to be multi-structure more to the downside for wave 3. They weren't going to get 4 and 5, unless of course, because this is wave C, right? Unless of course if we see something like some sort of ending diagonal. So we need to look at a potential move down first, because we need to see wave 3 being at least bigger than wave 1. Not always the case in ending diagonals, but we prefer that due to the current structure, right? So then a leg down, then potential up, interfere with wave 1 for ending diagonal, or just moving positively downside with no interaction, just for it's going to be a motive wave either case, right? Now the signal I've got here, it's very tiny, it's not that much, but the price is the one that is giving us the divergence rather than being obvious on the actual oscillator itself. Now with that said, guys, the expectation for downside, since we've got 3 and 4, first we need to do the 38.2 and then 61.8. So we're looking at 72 and then 70.50, and the 70.50 is also a cluster. That is a cluster on the upside leg, okay? Because we are looking here at wave 1, okay? So from 0 up to here, 38.2 is exactly at 70.50. Now that might also be A, B instead of 1 and 2, right? It's just I want you to assume, and I keep repeating that in many of my videos, where you see 1 and 2 and 3, you can also assume ABC always, until, of course, unless if in wave 3 I say otherwise. So that's what I see currently. The alternative, I'm not really thinking about that changing much, to be fair, because the correction here is done, the correction here is done. So we're probably looking at the last leg to the downside, since we also have a 5-wave move down here, right? Now, an alternative might be that we're going to get that anyway in the shorter term. I'm going to get a W here, an X, and a Y, okay? But this is like medium to longer term sort of change, not in the short term. Now, prices of oil are doing what we expected. It looks like we're going to remain in this consolidation for a bit longer, okay? Because we are most likely going to have W, X, and Y here. My wave A is done, yeah, and my wave B looks done so far, okay? But if we take this sort of correction for a guide, it might be a case that this is A, B, and we might see C over here for B, right? And then we're gonna get another leg to the towards the, well, I would say towards the 60 level, right? So the 100 Fibo extension here, what we're using between W and X, brings us to around the 62.47. The current move to the downside still looks impulsive, okay, because we didn't get interaction between 1 and 4, the current 1 and 4, which is around 68. So should we get 68, yeah, then we might get some sort of signal for an ending diagonal here, right? Because that might be the case here. But we really need a break before below wave A, because ending diagonals cannot be truncated. So the scenarios here are two, and with the signal here on the RSI and MACD looking likely that it's already priced in, yeah, we might see prices, you know, consolidating around this area perhaps, okay, because there is no signals on the RSI or MACD to the upside either. Usually that means, of course, continuation, because this is the larger sort of trend, right? But I'll be also cautious about this potential move being B and this is C, okay? So perhaps we're gonna stay a little bit quiet today and get a move in the medium term to the downside either way, okay? Now, of course, 1 and 2 again here. I'm not sure why this is like that, but either way, 1 and 2 here, I think that should be down there. And perhaps that might be also A and B, okay? S&P. For S&P, well, you remember a week, maybe or two ago, I changed the structure from an impulse to an ending diagonal because I saw an interaction between waves 1 and 4, right? So to me, that looks like, you know, 3 and 4 are done and we are in the last move to the upside. My wave A is done. I got my B, and that looks like the 4 is also done. 1, 2, 3, 4. And we might get 5 very, 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 very soon, guys. Okay? We see a double divergence on the MACD, on the RSI, and also a double divergence on the MACD, both histogram and EMAs, both of which are great signals. Now, I'm not going to use any Fibos or anything. I'm just going to tell you that usually with the ending diagonal fifth wave is overthrown, okay? That is not expected to be much, maybe 5-10% overthrow or something. I mean, truncations usually are 70%, you know, they're expected, which means 30% is left, but I wouldn't say 30% in this ascending diagonal sort of case. I think it's a bit too much. Maybe a small move. Actually, I would do 3 and 4. That means we're gonna start from 1, yeah. So 1618, that would definitely be too much. Maybe we can start from 1. Let's just have a quick look just to get a guesstimate here. We're gonna go to 3 and 4. 4 again, maybe another level is actually going to give us better insight. The 45.79. And even that, I think, might be too much. Unless if you know, we do something like 1, 2, 3, 4, and 5. That's going to be my wave 1. Then we get 2. Then we get 3. Then we get 4, and then we get 5. Because we are going to see a 5-wave move up in C, right? That can be in 1 degree or unroll into 2 degrees. So keep an eye on that. Just know that this zone, yeah, should this structure, of course, prevail, this is like a warning. Natural gas, I've told you about the correction I was expecting, and it's come through. Even last time we said about the potential of doing a double four down here, and this is what I think now is the case. Looking at a 4/5 of leading diagonal nearly done over here. This is a leading diagonally 1, and then 2, you've got 3, and actually, I'm sorry, it's not a leading diagonal. Leading diagonal is in 1. Yeah, this is just an impulse wave to the downside. 1, 2, 3, 4, and 5. Unless if, of course, we get something like this and there is penetration, but I don't think that's going to be a case. We missed this channel trend line for a reason. Most likely we're going to see a continuation to the downside if we also take into account how long this retracement lasted, unless if, yes, alternative in the short term we get ABC. Again, I would assume that we're going to remain below wave 1, and then we're going to get the 5th one. That's going to be for me A. Then we're going to get B, most likely, then C for 38.2 or 3.50, which is also a double floor Elliott Wave cluster. Okay, we do see this signal actually already priced in. Now what we would prefer to see is downside move, yeah, with a potential bullish bias, hidden divergence. Okay, if we don't see that, which is according to what we're looking currently most likely the case if we want to do the double four, if we don't see that, then the chances of getting down to 350 are going to be higher. Okay, so that's going to be for this Tuesday's Markets and Waves video, guys. Thank you very much for watching. If you like the video, click the like button, subscribe, ask your questions, leave your comments, and we'll speak again tomorrow. Enjoy the rest of the trading session and take care.